Let's interact with the management of Strides Pharma. We have Arun Kumar, Executive Chairperson, joining us. And Mr. Kumar, the company has been continuously delivering a good set of numbers and good profits for the last 4 quarters. What is fueling this growth, and is this sustainable going ahead as well?
Hi, thank you. Thank you very much for having us. Yeah, of course. I mean, if we delivered a good result for quarters, it has to be sustainable. What we've done, obviously, is focusing on the balance sheet, free cash generation, phenomenal growth, quality of business across all our businesses. And consequently, we just upped our guidance, as you would notice in our release, to the higher end of the range, both in terms of growth, EBITDA, PAT, and EPS. So we've been very focused on quality of the business, the profitability, deploying capital at the right place, the right time. And all of these are playing through. And I think from here on, this is a very sustainable level of growth.
Good morning, Mr. Kumar. This is Shrishti also joining in. But given the great set of numbers that you have posted yet again, will you revise your revenue guidance? Since for the 9 months of FY25, it's already been up like 17.3%, and your guidance is 12 to 15%. So just wanting to understand that any changes you wish to make there, and also if you can help us with your EBIT margin guidance as well, and how likely are you going to be there?
No, so we actually upped our guidance to the higher end of all the ranges. So our EBITDA guidance now is 800. Our quarter released trends at a greater run rate of 800. Revenue was 12.15, but last quarter was 14.5. 9 months was 16.5. So I think it's good to say that we will be 15 and slightly above. Net debt to EBITDA, we are about a quarter and a half ahead of schedule. So that's great. We started off 3 years ago at a very high levered balance sheet. That has been a great outcome. Free cash generation is significant, and that's leading to our debt reduction. And I think at this time, with just a few more days, and few more weeks rather, into the last quarter, it's not the appropriate time for us to change an overall guidance. I think post this quarter, we will then come back with some newer ideas on how we run the business. But yeah, all engines firing and business is looking very good. Thank you.
Also, if you could tell us about your strategic investments that you've made in new segments such as controlled substances, nasal sprays. Now, will this lead to the company exceeding the 400 million revenue objective that you had earlier shared for FY27-28? On the back of these investments that you are making, will we be seeing anything exceeding this 400 million number that you've given?
So there are 2 parts to that, right? The 400 million is a guidance for a generic play. So that has a run rate of approximately $300 million. So getting to $400 million in the next 2 to 3 years is not so difficult, considering that we have over 250 ANDAs approved. We manufacture in the US, obviously. So a large part of our production is now in the US in our New York facility. We also have now started inserting a new terminology called Beyond Generics. And Beyond Generics is our nasal sprays, our 505(b)(2) programs, which are differentiated products. We expect, as previously guided, for our first filings in that space to commence in Q1 of the next financial year. And typically, the approval cycle is about a year. We are extremely confident about those programs. They go beyond the 400 million generic strategy that we have.
Right, with this, Mr. Kumar, we'll let you go on that. Really appreciate you taking the time out and speaking with us on your earnings, and wishing you all the best for the upcoming quarters.
If you like this video, then like, share and subscribe to ET Now.